What's going on, gang? I want to talk a little bit about the tech sector, the Qs, the NASDAQ 100. Um, I'm getting a little sick and tired of the NASDAQ. I really am. I mean, I understand the gist of it, okay? I understand that the 10-year treasury bond yield went up. I understand that every time um, Powell comes on to speak on CNBC and they're doing these hearings, that the market does not believe him and we sell off the next day. I understand that we had what is the Evergreen cargo ship that was trapped in the canal that is now freed. I understand that. I understand that the hedge fund, I can't pronounce the name, forgive me, got liquidated $50 billion. And I'm sure there's other small hedge funds or private family trust or funds or whatever you want to call them that are not heavily regulated, got liquidated, margin called. I understand all that. But I just feel like the market that we've been in for the past 4 years, honestly, 4 years has been an insane bull market. Okay. It could have made a first grader look like they've been trading on Wall Street for 20 years. Okay. Understand that. A first grader could have picked a stock, picked an entry point, got long on the stock, came back a week later and made money. I understand that. The stock market's not always like that. Stock market goes up, stock market must come down. I understand that. But my God, can we just get the narrative straight? Can we just get the narrative straight? Is it the bond yields? Is it inflation? Is it the cargo ship that was stuck in the canal? Is it Jay Powell? Okay. Is it that hedge funds are getting liquidated? They're over leveraged and they're being margin called. Maybe because they're short a stock like GameStop, they're short a stock like AMC, they're selling off other positions, they're getting liquidated off of Viacom. And that's why the rest of the tech sector, the growth sector, the stocks with the high PE ratio are getting hit like a ton of bricks. I mean, some of these stocks are just getting obliterated. I was trading Fubo, FUBO, for months. We had that insane rally to 65, and then we dropped down to 40, and then we dropped down to 30, and I felt like it was resting there in that area. That stock's at $21. The stock's at $21. Skills, SKLZ. I've traded this stock from $30 to $45. The stock was at $18, and I'm seeing heavy option flow coming in for 1750 puts. 1750 puts. I mean, this is almost going back to pre-SPAC levels. Insane. This is insane. I do believe that the stock market is going to recover. I do believe that a lot of these stocks are oversold. Square, SQ, oversold. Did it run up 100%? Did it run up 80%? Did it run up 70%? Have some of these stocks run up to 300%? Yes, they have. During all of 2020, the pandemic crash in March and the run up from April until December, January, I understand that a lot of these stocks are overvalued, but some of these stocks are down 40%. So I wanted to make this video. Does the tech sector start to recover? Was the sell-off on Thursday the double bottom? Okay. So going back to March 5th, March 5th, sorry, just checking to make sure I was recording. March 5th, we came down and we tested the 150-day average. Okay, these are channels. These are channels. This is a channel. This is a channel. This is a channel. These are ranges. These are ranges. I'm a technical short-term swing trader. I'm a technical short-term day trader. I'm not an investor. If you're an investor, you got nothing to worry about. The last 96, 97 years, the stock market has only gone up. Don't check your portfolio. Come back in a year. Okay? You'll make money. But for us guys who and gals who are short-term swing traders, short-term intraday day traders, this kind of stuff affects us and it matters to us. And it seems like the Dow is rallying. The SPY took a little bit of a hit, but reclaimed a lot of levels, the 20, the 10, the 5, the 50-day average. The Qs got beat down. And we are having trouble reclaiming the 50-day moving average. And we've been stuck in this channel and we've been bouncing off the bottoms for the past 2 to 3 weeks. Something's got to give. Either we're going to drop down and completely crumble to 305, 295, 297, 285 on the Qs, or we're going to start to grow a pair and the bulls are going to start to rally and start to reclaim this first level of business here is reclaiming 321. 321 on a close. I'm going long. 324 on a daily close, on a daily candle. I'm loading up the calls, baby. I'm loading them up. But right now, I'm at a standstill. So does tech start to rally? Here's what we're looking at. Today was Monday, the 29th of March. Tomorrow is Tuesday, the 30th of March. And the levels that I am watching for tomorrow is going to be a reclaim of the 20 and the 10 day. I believe we closed over the 10 day, today. So the bulls did reclaim the 10 day today. However, the 10 day is still beneath the 20-day moving average. We need to reclaim and have a crossover so the 10 day gets above the 20-day moving average, and we need to reclaim the 20-day moving average. And that price is 317. 317 is what we need to do. Okay. If tomorrow on Tuesday we can reclaim 317, it's looking really, really good to make that next leg higher into 321. And I think that if we can close into 321, a lot of these growth stocks and a lot of these speculative stocks are going to start to make a bounce. They're going to start to make a recovery. Money flow is going to start coming back into the tech sector. However, there's always a but, okay? If we start to retest the 311 and the 309 and we break below, all bets are off. All bets are off. I'm taking puts to the downside, 305, 295, 301, 290. I'm loading it up. Okay. Those are the levels. Those are the only levels that you need to be focused on. The major levels that you need to focus on is 309, 53, and 317. 317. Those are the two levels. 317 and 309. If we can start to close above those two levels of 317 and 309, we're going to be out of the woods. But 317 to the long side, 309 to the downside. If you start to break down below 309 to the downside, I do believe that we are going to retest this bottom that we had here at 301. Any close below 301, look out. Look out. 290, here we come. Okay. So, but in order for the tech sector to sort of recover, we need to figure out what the root of the problem is. And I don't think the average retail trader like myself, or like myself, the average retail trader, is going to get the answer to it. Is it Biden administration? Is it the 10-year treasury yield? Is it inflation? Look at, we're not stupid. We know that inflation is going to go up. We know that the 10-year treasury yield, the interest rates, the bonds are, they're going to go to 2%. They might go to 2.5%. We know this already. We've got to start pricing some of this stuff in. Okay. We've got to start pricing some of this stuff in. Stocks have been hit 30%, 40%, some of these stocks. Okay. So, I mean, the light bulb needs to start going off. Light bulb needs to start going off here. Be smart. You don't want to be going long if the market is going short. You don't want to be going short if the market is rallying up. So for tomorrow, going into Tuesday's session, let's look for a claim of 317. Let's start. We gotta crawl before we can walk, and we gotta walk before we can run. Let's reclaim 317 before we really start to load up and go to the long side. Because right now we're stuck in a very, very narrow channel between 316 and 311. 316, 311. 1, 2, 3, 4. The last week. And before that, we had a strong rally. But before the strong rally, 1, 2, 3, 4, 5, 6, 7, 8, 9. It's been 2-3 weeks that we've been under these levels. These are the levels that we need to be paying attention to. Right now, we are not overbought or oversold. According to the RSI on the daily, if we switch over and we go to the hourly chart, it's a mess. It's a mess. A mess. All these lines, all these squiggly lines, some people say you have too many lines on your chart. All these lines are ranges. Are ranges. You ever wonder why when you buy a stock, you feel like you buy a stock and then 20 minutes later, an hour later, it gets rejected? You ever wonder why when you buy a stock and it dips, why it bounces? 9 times out of 10, because it's running into a level of supply or an area of resistance. Stocks sell from supply to supply and demand to demand. Okay. So on the hourly chart, it's a nightmare. Hourly chart, we need to reclaim 316, 315.45 at the bare minimum, 315.45 at the bare minimum. If you're a bear, now I'm not a bear nor a bull. I just look to trade channels and I look to trade ranges, whether that be to the top side or to the bottom. But to the long side, 315.34, 315.45, bare minimum before I'm getting long. To the short side, 313.96. Let's call it 313.50. 313.50. I'll take puts. And 312.47, 1 point move. A 1 point move, I'll take 10 contracts, look to make 1 point, $1,000, $800, $700, depending on what your strike price is. You start building below 312, look out below 308, here we come. 309, 308, here we come. Nothing but air. To the long side, you want to take calls. You better start building above 315.34, 315.50. Let's call it 315.50. 315.50. 316.44. That's going to act as your area of resistance. If you take calls from 315.35, 315.50, you're looking to make about a point. Not saying that it can't go to 317, 318, 320 on intraday, but to play safe in this market, 1 point. I'll take 20 contracts. I'm looking to make 1 point. Whether that be up or down, set a tight stop loss. So is tech out of the water? Is tech going to recover? Is the NASDAQ going to recover? Is the Qs going to recover? Those are the levels that you need to be watching. Right now, the futures are down, but the futures, I mean, I feel like a year ago, the futures were never red. I feel like the last 2 months, they're red every day. They're red every day. Right now, they're down $38, $39. It's nothing. It's peanuts. By the time the morning rolls around, pre-market and the market opens, these things could be up 10 points. They could also be down. So I'm not too worried about the futures right now. If they're like bleeding, I mean, I'm on stock twits a lot. I see people saying, "Oh, the futes are ripping. The futes are ripping. It's up 0.2." Or I hear bears saying, "Oh, bulls, you guys are in trouble. The futes are dropping." It's down $5. So take it with a grain of salt. Do what you want with it. I am not a financial advisor. I'm just a guy who likes to trade stocks. Those are the levels that you need to be watching for. Break below 312, reclaim of 315.35, reclaim 315.50. You want to take options to the upside, 315.50. You're looking for a 1 point move into 315.50. You want to take options to the puts to the downside. We need to break through 313.91, and we're looking for 312.50, 312.40. If we start to really build below 312.40, 312.30, bounces up, 312.20, bounces up, 312, I might take puts intraday or overnight swing trade, but look to get out quick from 312 to 309, 312 to 310. 1-2 points in this market until we reclaim the 50-day moving average on the Qs at 324, or we break down completely below 308, 305. I am not looking to get super long, and I'm not looking to get super short. I'm looking for very small moves in the middle. In the middle. Protect your capital. Protect your capital. Hope everyone has a good day tomorrow. Hope everyone makes a lot of money. Remember to be smart. Control your capital. Risk management is always number one.